Hello, this is Steve Malone with Comps of X. Hope you're doing well today and you get some good trades. We had some pretty good trading this afternoon when the FOMC surprised the market with a $10 billion tapering to begin in January. It sounds a bit dovish, but the market liked it. We saw the Dow and the S&P make record highs. We also saw the bond market make a move up in the 10-year note, moving up 4.5 basis points to 2.89%. And as you can see, the dollar-yen, very nice move to the upside today. It moved about 170 pips from the open of the day to the top side. The pound yen was the big one for the day. It moved up about 420 pips to the upside. And you can see here in the pound Swiss, it too made a pretty strong move from the open to the top here of about 280 pips. All these were at least double their average daily range. So what I want to share with you in this video is, now that you've made all these big moves, what do we look for that potential retracement? I don't expect the market to go all the way back to where it started at, but I do expect some retracement or some reversal to take place. Now there's a few things you can do to consider what that retracement might be as a potential target. But what we also want to look for is, what are the setups? I want to look for divergence. I want to look for some sort of topping pattern, like a double top type pattern, or maybe some other type of setup that suggests that it's done moving much higher. Now don't think for a moment, since it's made such a big move, that's going to go all the way back. Most likely it won't. When the market makes these big moves, basically it's moved from a daily range into a new daily range. So when you see movement that's a double or 2.5 times the size of its average daily range, don't be surprised if the market stays back up in that area until there's some other big event that would cause the market to move in the opposite direction. Now with a strong dollar scenario, I do expect the possibility that the yen could push higher up to 105. But right now what we're looking for is, what are those setups to suggest a retracement or a reversal? And we're having one right now in the dollar yen. One of the things I look for when I trade is I like to look at the sentiment in the marketplace. The sentiment has a tendency to move before price. And so what we want to look for, like in the Trader's Dynamic Index, is that the green is crossing the yellow here and starting to make a move down. And I want to see the same scenario in price. However, I want to be convinced that price is actually making that move. So let me zoom in a bit, and you can see that it has a low that sits right about in that neighborhood. So I'm going to be looking for the market to break that low. I already have a sign that the market could potentially go lower, but I need to see that it's going to break that. And for me, a break would be a close below and then continuation. So it may just come down to the 104 level, which we got to think the 104 level is the psychological level. One other thing I like to do is take a look at, okay, from that low to the high, what's the 23.6 retracement? Usually we see the market doing that sort of retracement. And that comes in right in that neighborhood of about the 104 level. So this gives me an opportunity to possibly pick up a bit as the market kind of comes back somewhat. Another thing you can do is simply look at the previous major low to the major high, and then look what is that 23.6. That would be, again, right in the neighborhood about the 104, a little bit below that. So I'd be looking for this to break down, and then I would look to see that this would continue to slide down below the 50 level. And if the market baseline turns, the yellow line turns and rolls, then we're going to look for that continuation. One other thing to consider is, what were the previous highs? We have a previous high right here, and that sits right at the large 38.2 from the major low to the major high. Let's take a look at the pound yen. Now the pound yen has been showing some divergence, and we can see it right here where we have this high to a higher high at the same time. In the Trader's Dynamic Index, we're going from that high to a lower high. Now divergence is an indication that the market may reverse, but it's not a sign that it's going to reverse. We still have higher lows here. See, this is a low, then a higher low. I'm going to need to see that this breaks a low in price and this continues to fall over. Now this looks good right here. If we zoom in a bit, you can see it. Green under red under yellow. That's a good look. And we look for that continuous move down. And right now we're trying to break some lows that we have right back there. there's a low right there, that 170.65 area. I'll be looking for the market to break that and push lower. Again, considering my fibs, from that FOMC low to the high that we've had, the 23.6 comes pretty close to that. Maybe we get a push lower. Bigger picture, consider the major low to the high. That 123.6 comes in right about 170.10. So I'd be looking for the market to break this area, push down to about that 170.50 to 170.10. That'd be an area I'd be looking for. If we get continued weakness seen in sentiment, there's a possibility that we move down to the standard profit-taking level of about 38.2. Last but not least, let's take a look at the pound Swiss. Big move on the pound Swiss, and I want to stress something with this, is that you can see that the market made its kind of average move up here. And if I take that same distance and I move it up, you can see that that's just about what the market did. So the market's moved into a new range. And if it moves into the new range, the likelihood of this coming all the way back down into this area is highly unlikely. So again, if the market moves at least 100% or so of its previous range, the likelihood of it coming all the way back down into that previous range is generally unlikely. So again, at this point, I'm going to consider from that low to the high, we're right about that 23.6. We haven't broken below, see this here? We haven't broken below the yellow market baseline. Still looking for that green and red to fall back over. And if it did fall back over and break this little level, and you can see that actually the 23.6, you can see that low is right in that neighborhood. That low sits right about there. So we'll be looking for the market to break that low and then possibly come all the way back down just in the neighborhood of about 46.10. As far as the big picture is concerned, from that major low to the high, that 23.6 comes in right at 46. We'd look for the market to come down. If we get continued weakness to the downside, I'd be looking for it to come down right to this high point back here, which sits right at the 38.2. Let that then be the floor. Old resistance becomes new support, and then we start working a new range. Well, this is Dean Malone with Compass FX. Hope some information about how to look for the reversal or retracement setups after a big move will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.